Retail sales numbers just overall. We took a look at them. They were not as bad as last month, goodness knows.
Right.
And those numbers were revised up a little bit, but still not exciting.
Not as good as people were expecting, and I think strength came from the same categories. Building materials and non-store retail were two that you've continued to see, non-store being online.
So people who follow these things closely as you do, what is their hypothesis about what's going on with the consumer?
I think there's a lot of different views on what's happening with the consumer. I think a lot of the macro indicators generally suggest that the consumer is strong if you look at unemployment numbers. But from a retailer perspective, you listen to the earnings call, the environment is still very promotional. It's very soft. They're struggling to drive traffic into their stores. Some of it might be the Amazon effect, but I don't think you can attribute everything to just one other company. Yes, that is a huge competitive pressure on most of the retailers, but I'm concerned about the consumer going forward, particularly if healthcare costs rise and the uncertainty that's just going on in the political environment.
Is that where the money's going? Because I mean, we know that they're getting some more money in their pocket. Wages are increasing, not robustly, but modestly increasing. They're not saving more by most accounts. So the money has to be going somewhere, and retail's losing it.
Yeah, it's probably going somewhat to online. It's going into their homes, but they're also spending a lot on credit, right? You saw charge-off rates rise for the private label credit card companies. So I think that's a concern. And then you have auto loan delinquencies.
So, Shelly, from a sort of macro to then sort of the micro, I mean, JCPenney's got hit again today, shocker, shocker. I mean, the adjusted earnings did come in at 6 cents, right? That was better. They did have a profit, but not enough. Walk us through what's going on that's sort of specific to JCPenney versus the broader macro for the company.
Sure. I think Seema's exactly right. People are spending, but they're being careful with what they're spending. And so if they're being careful, they're not necessarily spreading all that money around to every retailer, which is why you see this huge divergence between some companies like Amazon, Home Depot, TJ Maxx, and then you see these department stores just getting absolutely killed because they're not giving consumers a reason to go and shop into their store.
And impressively, we had, for the retail sales numbers we got out today, right, you see potentially tax returns are coming in, so now we're seeing a little bit more spending. March was revised a little bit. 9 out of the 13 major areas wound up getting sales higher. So, Seema, that doesn't seem to me that it's really bad. That seems to me like it's stable, and then as Shelly points out, it's individual retailers that get hurt.
Right, but there was the Easter shift, right? So that pushed some spending into April versus March. And the big driver of retail sales last year was auto sales, and we heard from the big guys last week, and those were very weak. So I don't know what would drive it going forward, what's going to drive this shift. And she's exactly right, and I think it calls into question what many of these legacy retailers are doing. All their initiatives, they may not be bearing any fruit. And so it might be that there's a relevancy question for many of the existing retailers.
And Nordstrom's is a really good example of that, actually, because their online sales were up 19%, but their comp sales in the high end were down by 2.3%. But the market didn't like it. But everyone wants online. They do well. They don't get compensated for it.
Well, the problem is when the big part of your business is still going down and the small part of your business is growing larger, it's not enough. And I think people were expecting a little bit more from Nordstrom. Nordstrom is supposed to be the best-in-class kind of department store there, and they just kind of showed like everybody else.
How much of this is simply losing pricing power as a practical matter? And isn't Amazon a factor in that? Quite apart from whether you buy the thing on Amazon, you can get price discovery in a way you never could before.
Yeah, pricing is a huge part of it. If you look at the prices of apparel sales, they have gone down and down and down every single year. Clothing prices are not rising. Electronics prices are going down. And the pressure from online, what that's doing, not just from Amazon, but also from their own their own brick and mortar retailers putting their stuff online, is that they also have the pricing pressure, but then they have been increasing their inventories to be able to cater to the online and the brick and mortar, and so then they have too much stuff and then they have to discount on that.